Hey, folks, welcome to InTheMoneyStocks.com's daily analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, everybody, into the action we go today on this Tuesday, one day prior to the Federal Reserve, January 25th, 2022. You can see I'm using a different charting software today for this video. I actually think it's going to be better for us. I can show more things. I can show more intriguing things, and I think that's going to be more beneficial overall. So I'm giving it a shot. We'll see if I like it after a couple days. Again, I will keep you guys posted. Okay, bottom line is we saw the market here initially open sharply lower and sell off. You can see this is today's action, right? This is actually a 15-minute chart right now. Initially, we saw a sell-off to the downside. Again, yesterday we closed right up here, right? So if we draw a line there, you can see very, very clearly that at one point today we rallied up almost to gap fill before falling off into the end of the day. But the day started with some selling pressure. We then put in a classic bottoming tail. Bottoming tails are denoted by a low pivot with a long tail, a close in the upper 25% of the candle. It's not really a long-term bottoming tail, just an intraday one, because for a long-term bottoming tail, you need it to be the lowest point in recent history, and yesterday we were trading down here. But bottom line is, you saw a nice reversal off that short-term bottoming tail, then a bullish consolidation pattern. Look at this, guys, right here. Bullish consolidation, classic consolidation off of this move to the upside. Again, you can see that flag starting. Then you broke up with, look at this, 1, 2, 3, 4, 5, 6, 7 candles. How many of you guys out there have taken the Methodology Revealed course and know your time counts? You know that, again, 7 is a major player here. And again, I saw a bunch of you guys buying the $2,100 deal. Congratulations. You have just improved your financial future exponentially because of that. All right, bottom line is markets got up to the gap fill. Then they pulled back into the end of the day ahead of Microsoft's earnings. All right, so let's take a look at what the heck Microsoft did here in the after hours. That's the next thing I want to bring up. Microsoft, again, today was actually down on the day. So, again, Microsoft closed up here around 296.73 yesterday. Today it closed down at 288. I'm going to throw on my after hours prints, and this is one of the cool things we can do here. There we go, pre-market labels. And right now you have Microsoft trading, as you can see, down at 278.46. So we're down about $10 on Microsoft in the after hours on earnings. And again, folks, this is not good for the tech sector. The tech sector, it's going to make it harder for the tech sector to bounce. We'll see if they can fight this off. Certainly not a major move. I mean, $10 on a basically almost $300 stocks, only a little over 3%. But nonetheless, it just keeps that negative vibe out there in the market. All right, negative in terms of technology, struggling to bounce. Now, can the Fed save the day tomorrow? We also have earnings from other big companies coming up in the next couple days. Can they save the day? We will find out. Let's look at Texas Instruments here, which also reported earnings. This is a semiconductor stock. This stock is actually popping. Here you can see it closed today at 174 and change. In fact, let's flip over to the daily chart on this. You can see it had just rolled over, getting a small pop. In all fairness, it's not a big move, about a $6 move to the upside from where it closed, but nonetheless, a nice little bounce there. Now, Texas Instruments is no competition to the power of Microsoft in terms of market cap. Microsoft, again, $2 to $3 trillion company. Texas Instruments, obviously, not even close to that. So, yes, Texas Instruments is good for the semis, a small positive. Again, not a big move, so you wouldn't call it a big positive, just a very small positive. But Microsoft being down on earnings certainly will pressure technology names. Even names like Google and Amazon and Apple will probably be under pressure because now investors are going to worry about them falling on earnings in the next few days when they report. Okay? All right, so we'll continue to monitor and see how that plays out here. Certainly should be very, very interesting. I want to go to the daily chart of the SPY. I have some lines here on my chart here that I want you guys to follow. And by the way, the SPY is now down about $2.75 after hours. So we are seeing some selling pressure in the after hours on the back of Microsoft's results. Okay, a couple other things here. You can see this is your upsloping trend. Remember, we broke it to the downside. We did hit some key levels here. Let me just draw that in here. So again, this would be said to be a major level right here. We pierced it, obviously, and you have a couple other levels like this pivot low right here, which we pierced as well, that gave us the support bounce that yesterday put in a semi-significant bottoming tail. I wouldn't call it an amazing bottoming tail because, again, if you look at the chart here, you have to note that we didn't make a long-term low, right? I mean, you go back you basically go back, well, I guess 6 months. I mean, this is over 6 months, so that's reasonable. So it is a level to trade against. But again, according to everything I'm seeing is, yeah, you're due for a short-term bounce back, but it may not be a long-term bounce back. So just keep that in the back of your mind, folks, that again, it may be further downside. I still think, again, you hold this low here, which was around this 421 area, and get a little bit more upside. I still think you could trade back to 445, 450, maybe, kind of right into this pivot low here. But ultimately, I do think more downside is coming, and the way you're going to know it is going to be simple. When you take out this on a daily closing basis, when you take out 421 on the spiders on a daily closing basis, watch out below. Now, I have some other stuff on the chart I want to show you guys here. I think this is really cool to see. If you zoom out on the chart, this was your trend pre-COVID, right? So, going all the way back to basically 2009, this was your trend to the upside. All right, when you do that and you project those lines out, look at the market on steroids, what it did when the Federal Reserve and the government came to the rescue with trillions and trillions of dollars. Remember, it wasn't just the $120 billion a month, which is $1.5 trillion per year, the Fed was pumping in, but they were raising their balance sheet by trillions, all right? They were lowering interest rates. The government was then running up huge amounts of debt. So, I mean, it was just all hands, no hold barred, stimulus to the market, and we saw the results of that. This has to be unwound. This is why I'm overall bearish on the S&P this year, at least until arguably we get down to this trend line here, which would be the top end of the long-term range. And if you get enough fear and panic, you could go to the low end of that. This would be my first kind of, there's a couple levels here in all fairness. So you have the high end of that upsloping trend there. All right, so you have this one right here. You also then have the pivot high prior to COVID, which is right here, which is around 340, and then you have the low end right here, all right, which is around 325, 315 right now. It'll probably be 320 by the time we would get down there, maybe even a little bit higher. But again, you just have to go by what the chart is showing you here. And again, it's really, when you see it in this metric with the vertical nature of that, that is unsustainable. Absolutely remarkably unsustainable. It is out of control. Has to be unwound. All right, and again, you're starting to see that. We've seen the trend break, right? So if you go here and let me just go back to this line here. And if you go back to where we broke right down here, that was an obvious trend break. Now, yes, you're going to get bounces, but it's more downside to come. All right, so again, we get good bounces. I want to short some more things. We'll take some profits on some of these stocks that we picked up over the last couple days. I was generally disappointed with some of the stocks that had great bounces yesterday. We were in the money on a lot of these, like Affirm and NVIDIA and SE, for instance, and some of these other ones. And then today they actually performed very, very poorly. AI was down 7%. Net was down I think it was down almost 10%. And then after hours on Microsoft, it's seeing even more downside. Yeah, not much, really just down $1 in the after hours. But again, it didn't take out the low from yesterday, but it certainly didn't have a great performance. Now, granted, markets were down today. We can flip over to the NASDAQ and kind of look at that in a second here as well. But certainly I was not thrilled with that performance. I continue to be very bullish on Chinese stocks for this year, South American stocks for this year, and gold. Speaking of gold, we're going to look at that in a second for a potential breakout. But aside from that, I think, again, net, you're going to see equity markets fall. All right, let's take a look at the Qs here. Take a look here, and you can see very clearly we had the breakdown on the Qs as well. Qs, by the way, are down about 3.5 points in the after hours. So nasty sell-off there on the back of Microsoft. Microsoft still inching down a little bit, trading down now about $12 from the closing bell today. But again, you do have support down here. There's no doubt about it that these levels are support. You could even make a case that this is the more important one right now. That kind of marks the low from this pivot right here. But again, if you zoom out on the chart, I mean, the trend was awesome in tech. Tech was doing great. You can see right here, right? I mean, this was your trend in tech, right? and then look at the steroidal push on the markets. In theory, you got to unwind it, folks, which is not a small move down. It is not a small move down that ultimately will occur at some point. And again, for me, ultimately, I got to believe that at some point you unwind to the pre-COVID high. And again, this is all contingent on the Fed actually having a backbone. I would like to just make this point that I personally think the Fed will taper fully, so they'll get, we're almost there at this point anyways. I think there's only another $30 billion to roll off per month at this point. But do I think they're going to raise interest rates a lot this year, like 4 times like the market thinks? No, I don't. I think that, 1 or 2 times max. And the Fed will then back away because the economy will slow, stock markets will continue to crater, and then unemployment goes up. And then guess what? Now the Fed can say, oh, but our dual mandate says we have to watch unemployment, so now we can back off. And yes, inflation should come down. I think 4% is probably where it's going, and then it's going to stay there. But it's still high inflation, but the Fed will say, okay, yeah, but high inflation we can tolerate when you have unemployment at 10% or wherever it is. We have to attack unemployment right now. So the Fed is in a nasty situation. Nasty, nasty situation. There is no good outcome here. The Fed put themselves in this box. You're going to need an ultimate global reset when all is said and done. But, it is, to me, it's inevitable. All right. So let's go and take a look at a couple other things here. The Russell today, let's take a look at the IWM. The Russell is only down about $1 in the after hours. The Russell was down on the day, but again, it wasn't a horrible day on the Russell, still way off of yesterday's lows. And again, it makes sense, right? So if you look at, JP Morgan was up today. Bank of America was up today. So bank stocks actually had a reasonably good day. The question is, when the Fed announces tomorrow at 2 p.m., what do the banks do? Do they continue to bounce? Technically, they are oversold. If I put up JP Morgan's chart here, I mean, for JPM, this is a big dip here, guys. Big dip. So I do think there could be a little bit more upside in JPM off the Fed, maybe back to 152 or so, in which case the Russell should do okay. Again, we'll continue to kind of monitor that. But certainly it's going to be wild stuff, folks. There's no doubt about it. And the markets this year are not going to change. They're going to be volatile all year long, which is going to give us lots of trading opportunities. I was kind of happy today was a little slower day because yesterday was just absolutely exhausting. All right, let's take a look at Bitcoin, and this is one of the reasons why I love this chart or this software, because I can actually show you the real chart of Bitcoin, not the futures chart, which closes on the weekends. I hate that because, again, there's crypto trades 24/7, 365. Again, you guys know I've talked about this bounce here. You had the same decline from the high here to the low. That's been replicated. That should give us some sort of baseline low pivot for now. I also showed you guys that if you take the 2017 high and you draw it through the lows here, you basically get that same low as well. So there's a lot of support here right around 33,000, 32,000 on the chart of Bitcoin. Now, eventually, do I think Bitcoin's going lower? Yeah, I do. Yeah, I do. So again, be aware of that. We're still doing fine on our BITO, which I still want to hold because I still, this bounce is so small considering the big drop that I still think you at minimum get back to the low 40,000s. At maximum, probably 46,000. So again, I think I'll probably hold it to about 40,000. That would be my goal. We'd make a nice chunk of change that way for sure. But that's, again, short-term projections. And then at that point, eventually you break this and you start to come down. Next stop would be obviously 30,000, which we came within about 3 points of, maybe 29,000 right there at these lows. Then you have the 2017 high, and then that'll be the big test. The 20,000 level is going to be epically big. Do we get there? Do we go below? If you look at past cycles on Bitcoin, in 2013, dropped 85%. 2017 dropped 85%. If you map that out, it's between 10 and 11,000. Now, that's worst case. I don't know if it will drop that much because there's a lot more investors, a lot more institutions involved. But again, if things get bad enough, if you see deleveraging continue, if the Fed loses control like I worry they do, they will and already have, in terms of, they want to raise rates, but then if the economy tanks, then they can't. But then inflation is so high, so what can they do? The market, in my opinion, is already losing faith in the Fed or has lost faith, right? The Fed has made huge screw-ups here, which is not good for the stock market, for their confidence. The screw-ups were saying that inflation was transitory. I came out here, basically in early 2021 saying it's not transitory. They couldn't admit that until the fourth quarter of 2021. All right, they also came out and said, "Hey, listen, we're gonna see, we're gonna raise, we're gonna lower our well, no, let me rephrase that. They said we're gonna taper and raise rates. Okay, so the market was like, okay, we have a handle on that. Then when just before the market started to collapse here, they came out and said, oh, and we're gonna reduce our balance sheet. That sent the market into a panic mode because it basically sends a signal that they're panicking over inflation, that they're willing to do so much or put so much on the table for getting inflation under control. So again, the Fed credibility is now starting to wane. It makes me love gold, like I said, and it makes me love foreign stocks, like, again, Chinese stocks and so forth. All right, let's go to gold. Let's go to the actual. This is one of the reasons why I like this too, is the actual gold chart here. Here's your actual gold chart. All right, and you can take a look. Gold close to a breakout, was above, now back below. This is the actual spot gold chart. And again, here's your upside first target once you get this breakout. But again, look at the outperformance. I mean, if you were to map out, so from the beginning of January, you've had this move up in gold, and then look at what the stock market's done crashing. Bitcoin's done crashing. Gold is outperforming just like I predicted it will for the year. Now, granted, we're only, less than a month in. But again, I still don't see the stock market doing much better, nor Bitcoin. By the end of the year, I think the disparity is even bigger on gold. All right, so again, borderline breakout. We do not have a breakout yet. By the end of the day, we pulled back underneath it. Keep that in mind. I'll continue to keep an eye on it. Let's look at the actual silver chart here, folks. Here's your chart on silver. Let me zoom out. Again, what you have here is a longer-term bullish macro pattern. The macro pattern, again, is a big move up, and then you basically have sideways consolidation here. So as long as that holds, this is in good shape. I don't have a big positions in silver right now. I'm not convinced. Gold to me is the pure play. Silver has the industrial side, which makes me nervous. If silver sold off down here to the 19 level, these pivot areas right here, then I'm a big buyer. At that point, I think you factor in the macro economic factors, and that's where you can start getting some major upside in silver and a bigger breakout. Eventually, silver's breaking out. That's not in question to me. It's the near term, the 3 to 6 month price action in silver that's a little harder to gauge at this point in time. Lastly, oil, and this is the beauty of it too, we can actually look at WTI and look at the actual oil chart. Check this out, folks. So again, oil actually had a decent day today, overall moving back up. Still hasn't taken out the short-term highs. Please notice this candle here is a topping tail, so until proven otherwise, that is a top. My reasoning is very simple for being short oil up here, guys. The short oil case is simply that with the Fed tightening and with inflation running hot and forcing the Fed to tighten, the Fed is tightening not for the usual reasons over the last 20 years, which was a strong economy, but because they have to get inflation under control. When you tighten interest rates, it slows the economy. When you slow the economy, it makes demand for oil come in, less demand for oil. Oil at some point is going to have a big drop here. Whether or not it goes a little higher in the near term, maybe. But at some point, if the Fed really stays the course here, then you will have oil collapsing back down. My guess is, even as low as $50 per barrel is a possibility. Okay, lastly, I just want to quickly go back to the QQQ and the S&P. Qs are just getting, Qs are getting rocked in the after hours here. 340.5 after hour print. Microsoft continues to see some selling. Let me just take a look at TXN. Did TXN turn around? Yeah, TXN's only up less than $4, basically $3 and change. So not pretty there on that front. And certainly, that's not going to help if it's not going to outperform there. If we go to the spiders, you can see here, spiders are now down over $3, almost $3.50 in the after hours. Now, granted, doesn't mean a hill of beans because tomorrow's the Fed. The Fed can say one thing, and all of a sudden we see the markets ripping to the upside. But again, this is a hairy market. This is a hairy market. There's no doubt about it. Be on your toes. These swings are now 2% per day on average. And basically, if you looked at the price action on a day-to-day basis of the S&P or the NASDAQ, it's probably averaging in 2022 2%. For those of you that have been around for a while, remember like 2017, 18, and even 19, you had periods where the volatility was like 0.25% a day. 0.25%. So, this is Fed caused, let's be fair. But either way, it's tradable. It's awesome. Let's trade it. Let's make money. You guys have a wonderful rest of your day. Take care.